tell us about this particular case.
Sure, thanks for having me. It's, you know, as we've been looking at the growth of this single-family rental empire across the country, what we hear over and over again is that this is an utterly unprecedented phenomenon, that nothing like this has ever happened in the history of the United States. In many ways, that's true, but in other ways, in New York City, we have this case study of what it's looked like over the last decade when private equity firms have gone in and seen what they consider to be opportunities in the housing market to make a lot of money really quickly. I know this is something, Juan, that you've covered extensively for the Daily News. And what's important to see, both in this case right now that Benjamin's living through and that 1,600 other families are living through, and in a slew of other past very high-profile deals, is that this has been something of a disaster, not just for tenants, but also from a financial perspective. These are deals that they were betting big, these private equity firms were betting big that they could turn these buildings around by pushing out hundreds of thousands of families. They weren't able to push out families because families organized, and as a result of that organizing, these deals failed, and it made a situation where the broader housing market in New York City got hit, and these tenants had to live in completely inhumane conditions.
Well, what about the rise of this private equity involvement? Because, I mean, most of these private equity firms often depend on pension funds, on labor pension funds to invest in them, to create the capital that they amass to then do these cash buyouts. Hasn't there been any reaction on the part of activists to question these pension funds on how they're investing their money?
Yeah, I think that's one of the most important aspects of this story that is very rarely reported. So, for example, one of the most spectacular private equity deals, predatory equity deals, to fail in New York City happened in complexes in Manhattan called Stuyvesant Town and Cooper Village. And these are massive properties, you know, in lower Manhattan, where a private equity firm, the BlackRock Group, or BlackRock, which is different than Blackstone, but they're often confused, believed that it could buy up these properties, transition these families out, force these families out.
Thousands of families.
Tens of thousands. We're talking about tens of thousands of families. We're talking about one of the largest deals in New York City history, in U.S. history. And it completely failed because the tenants did an incredible job of organizing for the fight to the right to stay. But what's interesting is BlackRock, at the end of this $5.4 billion deal, lost just over $100 million. However, the California Public Pension Fund lost $500 million. The California Teachers Retirement Fund lost $100 million.
Because?
Because they had invested in this deal. And because these deals are often rigged, such as that if the private equity firm loses, they don't lose very much money. And if they win an incredible amount of money. So again, it's one of these examples of these perverse incentives where private equity firms, big banks, are able to eliminate risk for themselves through these complex financial products, through these securities. But meanwhile, our own lives, our own communities are getting significantly less secure.
Why rental properties? Why are they turn a profit for these equity companies?
In New York, the bet was that private equity firms could buy up an incredible number of rent-regulated buildings and force the tenants to leave. And by forcing them out, they, based on New York City tenant law, these owners now have the opportunity to raise the rents dramatically. The tenant laws in New York City is that if you've been living in an apartment for a long time, there's a cap on the amount that the rent can go up each year. If a long-term tenant leaves, then you can raise the rent dramatically. So the bet by these private equity firms was that they could buy up these apartments and just force people out at a rate that was, I mean, spectacular. In one deal, they bet, essentially, Rockpoint, a private equity firm, bet that in 5 years they would be able to force 50% of the tenants out of their properties. The turnover for rent-regulated properties in New York City is 5%. So the reason we call this a predatory equity deal is because there is no way, and you can testify to this, there is no way that they could hit these financial projections without doing things like cutting off the heat, cutting off the water, cutting off the hot water, allowing vermin infestations to fester. All of these abuses to push people out of their homes.
Well, Ben Warren, tell us your story and the buildings that you have been helping to organize now for quite some time.
Well, I'm with 1511 Sheridan, 1511, 1521 Sheridan Avenue. And that building...
This is in the Bronx.
In the Bronx, correct, the South Bronx. Well, in that building, we have problems with One time it was a problem with the heat, hot water. They found the way of just shutting off the heat, turn it on at a certain time, shut it off at a certain time. They have a thing about rent. Tenants will move in those apartments. They say, okay, you have to pay 3 rents. You have to pay a month's rent, a month's security, and a month's broker's fee. Now, I make it clear to the tenants that if you
now this is for tenants who are already living in the apartment.
No, tenants that's coming in for the first time.
Okay.
They will charge them a broker's fee, and I tell them, now wait a minute, did you see a broker? Did you contract with a broker? They said no. I just came to the building, I saw the super, and okay, we end up paying a broker's fee. Why? Did you know that broker's fee was illegal because you did not contract with a broker? They don't know this. But then we have other problems, like tenants moving into a new apartment. If the previous tenant was there and he's only paying $626, the new tenant come in, they're paying $1,000, which is way above the equity price of that apartment. Yet, if a tenant bringing another relative or another member to live in that apartment with them, they will raise the rent again to $120, $160 more. And this is going on kind of rapid, just regular with colonial management.
You've called the city to complain about conditions like not having proper routes to get out?
That's correct.
What's the issue?
Well, first of all, as everybody knows, you must have a secondary exit to get out of the building. If you have emergency where you can't leave the front of the building, you must be able to have a secondary way to get out. And my building, 1511, 1521, they blocked off the secondary exits. So one time they actually blocked off the secondary exits for 1511, so you couldn't get out if there was an emergency. They blocked off the C and D side, where if they had to get out of the building through a secondary exit, they can't get out. They're blocked. They're stuck.
So what is the city doing about it?
Well, first of all, we had the fire department come in. They issued their violations that these are illegal gates. As of yet, they're still there.
Can you tell us about Ocelot, Laura?
Sure. Ocelot was a real estate company based in New York that was backed by private equity money from Israeli private equity companies. I'm using the past tense because it essentially all but disappeared in the midst of this crisis that it orchestrated. It bought up a number of properties up in the Bronx and immediately started creating unlivable situations with the goal of forcing tenants out. We're talking about no heat. We're talking about no hot water. Sometimes we're talking about no water at all. We're talking about ceilings caving in, pipes bursting. One tenant organizer who went up and did a site visit said that she found a family living with no bathroom and 3 small children. And people always ask, well, why don't people just move? But we have to contextualize this in the midst of a much broader housing crisis that we're very much still living through. So, when people have this rent regulation, or they have a housing voucher and it's affiliated with a building, it's attached to a building that they can afford, but even if it's unlivable, people will stay and fight for the right to live in the city where their job is, where their community is, where their family is. And so Ocelot really made headlines by highlighting the fact that these private equity firms were creating situations that people can't conceive families are living through in New York City.
And what's been the response of the regulatory officials on some of these issues? I know when Eliot Spitzer was Attorney General, he went after some of the groups, but he actually himself is from a landlord family, and he didn't go after them too vigorously. And now with Attorney General, then Andrew Cuomo came in as Attorney General. Now you have Eric Schneiderman. What's been their response to these abuses?
Yeah, that's a great question. I mean, we did see the Attorney General's office sue Vantage, which is one of the landlords of Benjamin's building, for a systemic attempt to force people out by sending illegal eviction notices. And we really have to highlight these are illegal actions, sending illegal eviction notices, cutting off the heat, cutting off the hot water. All of these are illegal. Why haven't we seen sort of more, prosecution of these crimes? It's a question I get all the time. At the same point, I ask back, why are we surprised that they're getting away with these types of abuses? These are the exact same types of crimes and abuses that we saw rampant during the mortgage crisis. This is part of a too big to fail mentality. I would also say this is part of a process that the Bloomberg administration really made its official housing policy to gentrify this city, to rezone it, to push low-income and working-class people out of it, people of color, to turn it into a gilded city. And so, I talked to a lot of people for this article who work inside city agencies. They say that the city agencies that would sort of prosecute these are underfunded, but there's also a lack of political will.
Well, one of the things that you raise in your article is that there's been the housing market has rebounded, but home ownership has not increased nationwide.
Yeah.
Talk about that.
Sure. I mean, so at that we're going to the national level at which we talk all the time. Every single news article is about this housing recovery, and it never asks who is it a recovery for. But this discrepancy between home ownership and rising prices, I think, really gets to the heart of the matter. We're seeing home prices rise very rapidly in many cities across the country. That said, the national home ownership rate is still falling. So who's buying these homes? Well, it's these private equity firms like the Blackstone Group, like American Homes for Rent, that are buying up an incredible number of homes, about 200,000 homes across the country, in what, in my opinion, can really only be described as a land grab.
Bundling them
And selling off, a bond as a security to investors all around the world in these rental-backed securities. What's exciting to me in the New York City case is that even though it's created an untenable situation for many tenants, we have an example of everyday ordinary people organizing and beating these private equity firms.